afternoon, Tapas.
Good afternoon, sir.
And I think again after the IMS conversation we had, today we are going to talk about ISD.
Yep.
And ISD is something which had come in from the beginning. And it was there in the service tax, it was there in excise. And now why suddenly, what has changed suddenly that GST and the GST department, the financial ministry is going to make it mandatory from 1st of April. And this is a question which all clients, everybody is asking today. What changed suddenly?
Wonderful question, sir. And I think this goes to down to the fundamental process or the structure which the GST is entirely based on. And after 7 years of implementation, the state governments have realized that there is some part of revenue that they are missing out. So what happens is when one person raises an invoice to another person, if the recipient is a B2B, the government parks it as a liability in their books of accounts because that person is going to take credit of it. Similarly, if the invoice is to an end customer or if the credit is not available at the end, in those cases is where the government recognizes the revenue. Now we know that GST is based on the federal cooperative mechanism that the country has, wherein the entire revenue gets split between the state and the central government. Now GST is also consumption based tax, which means that the ultimate revenue has to go to the final state where the services are being consumed.
Yes.
Now there are certain common services, and there are companies across India who have their location or a head office at one particular state. Now this head office receives a particular invoice or a service which is consumed by different offices of this entire company. Now because ISD being optional, these companies, what they do is they book that invoice, and let's say for example medical insurance for which credit is not available. So if there is a head office which has taken this services, the head office would get this invoice.
Yeah.
The head office would book it and then not take the credit. Based on the place of supply rules, wherever the head office is situated, the revenue would go to that state, whereas your employees might have been spread across the entire country. So that service which is consumed across the country is not getting distributed, which is where the government now says that the ISD is going to be mandatory, wherein this head office will take this ISD registration and distribute the credit to all the states so that it gets distributed to the consumption state.
So one of my tax head, a very good friend, he had a very interesting take to this. He said that it is not suddenly people have not woken up, but up till now center was subsidizing the states for the loss of revenue or whatever less revenue they were getting.
Absolutely.
Now they've stopped it.
Correct.
And that is why the states have opened up and put too much
Correct.
pressure onto the center
Correct.
to start making it mandatory. So that's the very simple reason why this has started.
Absolutely correct, sir.
And the second point is that this is so complicated because for multiple states I need to have two different registrations. One is my normal registration, one is my ISD registration. Then I have to figure out what are the kind of revenue share that I'm going to do for each of the state. It is based on the last year's revenue or maybe the last quarter's revenue if I have added certain things into it. And then the second step comes in that how do I really go out to so many vendors? Means a large bank will have 50,000, 100,000 vendors. How do I go out to each of the vendors who's providing me one or the other kind of a services and ask him to generate an invoice on one GST registration or the second one? It's very, very complicated. So is this going to really be workable or it's going to be a mess?
So to answer in one line, it is going to be messy, but whatever corporates can do, they have to reach out to their vendors, ask them that you are our common vendor and you will have to start issuing invoices to us to our ISD registration to make it simple. There is one provision under the ISD law which says that if uh, 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 a normal registration or a registration which is not an ISD, a regular GST registration in one state can raise an invoice to the ISD registration within that state in order to pass this credit. Now, this provision was very specifically meant for cases which are covered under reverse charge mechanism, because ISD is a mechanism where it can only get an invoice and distribute it. It doesn't have the powers to do anything else.
Yes.
So it was also not allowed to have a cash ledger, make payment of taxes, which is where the council had said that in such cases, let the normal registration make the payment of RCM, and then it can transfer the credit, and let us have an enabling provision. When this enabling provision came in, it did not have this specific kind of scenario written. So there is still an option where you can say that if your vendor has raised an invoice to a regular registration instead of ISD, you can pass this credit. But again, it is, as you said, it is going to create messes because your normal registration will keep on charging invoices to ISD, and then ISD will distribute it.
And this is a cross charge mechanism, as is
It is
what
kind
people,
of
it's a
it is
kind
a
of
kind
a
of a
cross
cross
charge
charge.
mechanism.
Yes.
Now, some of the clients that I was speaking to that, and I was literally laughing at their stupidity, is they were saying they are going to do 100% cross charge. So everything they'll buy in a normal registration, cross charge it to the ISD, and then distribute it for ISD. And I said, you are doing abel mujemar, you are inviting notices to you, because when they see the ISD registration, they will see self invoicing only, they will not see a service invoices at all into it. And that is something very clearly a red signal that something is not right into
True.
the system, even if you are doing everything right. And that is something which should be avoided to a major extent.
Absolutely.
So would cross charge be eliminated, or it will remain?
So cross charge and ISD from the beginning have not been substitutes of each other. There were various advanced rulings where they said that you do either cross charge or you do ISD, but there were a couple of advanced rulings which also said that you do both. And there were certain clients who were absolutely not doing anything. There was a circular that came in which said that yes, ISD is optional right now, and also gave a lot of relaxations in terms of cross charge, saying that if you are getting credit, you don't do it, etc. But the government is very clear where there is an internally generated service. So you're using third party invoices within the organization to provide some services to your distinct persons, that is the other GSTNs within the same PAN, then that is something that has to be done by way of a cross charge. And those third party invoices which are direct, for which services are directly consumed by the different location, has to be done through ISD. So organizations will have to wake up, decide and or identify expenses which are supposed to be done through
Cross charge
ISD or cross charge, have a proper policy in place and then follow it. Blindly doing everything, receiving all invoices at one location and then deciding to do a cross charge for ISD, or not doing ISD at all, is going to be troublesome. Not doing cross charge may still be okay if you don't have exempted turnover, but if you do have, I think it's time to wake up now and do the analysis.
But why do I do have to do IST on the invoices where I'm not going to claim input tax credit? Means on the services that are not ones which I'm not going to claim the input tax credit. Why do I need to do ISD distribution on them
So
as well?
as I said, it's the state governments who want the revenue. So if let's say I have a headquarter in Maharashtra, I am receiving an invoice for medical insurance or health insurance for all my employees, and I have other locations, let's say in Gujarat and Karnataka as well, where 50% of my employee is based. If I this credit, I am saying that this is not eligible to me and I am booking it in Maharashtra, not the insurance company raises an invoice to me and mentions the place of supply as Maharashtra, so the Maharashtra government gets the revenue. Now Gujarat and Karnataka will have a problem that your 50% employees are sitting in our states, and this credit, because you did not distribute it, I am not getting the revenue out of it. So Maharashtra is the where you are registered will not have a problem. The other states will have a
Issue
problem.
into that.
So it is essential for these states to get their share of revenue that ineligible credit also gets distributed.
So we are working for the state much more than what we should be working.
Absolutely, all majority of the compliance, say IMS or probably ISD, it's to ensure that the states get their due revenue in terms of the structure of GST.
A very interesting question, and this comes much more frequently from the clients. Is it in law or it's through a circular? So if it's not in law, we will not do it. If it's through a circular, we may do it, we may not do it. That's a type of thought
Right.
process which they speak out. So is it in law or is it a circular?
So this normally comes in for IMS. IMS was only based on an advisory. There was no changes in the law, but ISD, the provision has always been there, but it was the government has clarified that the way provision was written, it was an optional mechanism for us to follow, and it was way back since excise, where people were having factories and they were getting a common invoice of service at their head offices, and they were not able to use this credit at their factory. So it was an optional functionality given in the excise regime, that if you're getting a common service invoice, you distribute it to your factories. That same optional mechanism was brought into the GST law, but as we discussed, the states were losing out on the revenue because people were not following the optional functionality. Now the amendment is being made in the law. It has been made in the law. It's just that they have notified that this will be applicable from 1st of April 2025. It is very well within the law.
One more question which has come in from the multiple client interaction that I had is that it says that it has to be invoiced. do I really need to create an invoice, or a JV that I pass it on into my system would suffice?
It's a document that has to be created. Once an ISD distributes a credit to whatever number of locations, those locations, in order to avail that credit, has to have an underlying document which has to be issued by the ISD.
And will this be auditable? Maybe into some notice or something?
It would be auditable. So GST authorities would of course ask for it. It will not form a part of your financial documents for your statutory audit, but for the purpose of GST law compliance, yes, this is required.
So on a kind of a safer side, I should create a proper
You
document
have to create
for
the
that.
documents. Yes.
Okay. I think more work for all of us, more work for consulting the clients and taking it further. So
Yes.
Thanks a lot. Thank you so much for that.
Thank you, sir.